Just in the past hour, we saw these two big ratings agencies downgrade Mexico. We saw Fitch Ratings cut the credit rating for Mexico and Moody's Investor Service shifting their outlook to negative. How big of a blow is this for Mexico's fiscal position?
Well, I think that this recent announcement on potential tariffs, certainly was a surprise and comes at a bad time for Mexico in that growth has been downgraded from 2% earlier in the year to now 1.3%. So I think that it gives Mexico less space on the fiscal side. They're going to have to continue to cut, which is a challenge. But I think on monetary policy, with inflation expected to converge within the central bank's target zone towards the end of the year, and the Fed on hold and possibly cutting, it does give the central bank some room possibly to ease, to smooth out these challenges.
But this is a broader issue.
But I think the good news,
Go on.
No, I was going to comment that I think the good news is that the reaction from Mexico, from President López Obrador, has been to this tariff news, has been very conciliatory. He understands the immigration issues, and as we've seen, he wants to negotiate. So, it's not clear that these tariffs, as has been already discussed on the program, will go into effect. But clearly, if they do, it's a serious issue both for Mexico and the U.S.
I was just going to say this is a broader issue with emerging markets, right? As you have trade tensions not only against Mexico, but also between the U.S. and China. So you had a very robust 2019 gain when it came to EM debt. But will investors have to reconsider their exposure to emerging markets now?
Well, emerging markets have actually been quite resilient since the trade discussions with China broke down earlier in May. Surprisingly broke down. Emerging market dollar assets, debt, and local currency debt actually posted positive returns in May. And I think there are a few reasons for this. One is that if you look at the credit fundamentals of the sovereigns in the universe, it's actually quite sound. Secondly, I think the search for yield with core yields in the U.S. going down considerably, with negative yields in Europe and in Japan. I think investors are looking for, kind of where can they pick up safe yield, which is somewhat ironic to call emerging markets safe. But when you look at the credit quality, it's actually, just right below, on average, below investment grade, or 50% of the universe is investment grade.
Yeah, Denise, in terms of safety, I just want to have a look at this chart on the Bloomberg terminal, and it does show that the cost of insuring Mexico's debts has now risen above the cost of insuring Colombia's debts. So in terms of safety, do you see anything in the default swaps market that gives you cause for concern?
Well, it's still quite low. I do think that the fiscal situation, the slower growth, is a challenge for Mexico medium term. But, they are starting off from a very comfortable position. And, they're still investment grade, and the spread is still actually quite low. But, I would remain cautious on Mexican assets while this discussion is going on.
Denise, just before we let you go, I want to quickly get your thoughts on the yuan. We've often talked about China looking to defend the 6.9 level. Is that what you see happening?
Well, we have seen, the yuan stable at around 6.9. I think that the dollar weakening more recently, and if it stays at least stable, I think that also gives more room for a stable yuan.